Traders are understandably worried after XRP's price fell 54% and the premium for open interest futures turned negative. In April, the price of XRP jumped 260%, from 57 cents on March 31 to $1.97 on April 14, the highest level since January 2018. As a result of this shift, XRP futures reached a record high of $2.1 billion in open interest. When the cryptocurrency markets crashed on May 19, XRP fell 60% in 4 days, liquidating $510 million in long positions. Open interest in futures contracts fell to $550 million, about the same level as in early February, when the altcoin was trading at 40 cents. Investors continue to speculate whether XRP futures could ever be a multi-billion-dollar business again. Is it a matter of time before April's numbers return to previous levels, or have they been distorted by excessive leverage? To determine whether the $2.1 billion futures market was unprecedented, researchers looked at volumes and, more specifically, premiums. This index measures the price difference between the value of futures contracts and daily spot market prices. If an unprecedented wave of bull markets occurs, it may take months for open interest in futures to regain the incredible levels seen previously. Not only would it take longer for traders to regain confidence, but the overpricing could inflate the futures markets. The number of available futures markets can show whether or not unusual events have occurred. There could be a clear correlation between this data and the traditional XRP spot markets, and futures volumes would have to rise sharply to maintain open interest at $2.1 billion. Following the flow, spot trading volumes resumed, with a significant spike on April 5. Moreover, daily derivatives market liquidity of $10 billion is more than sufficient to fund $2.1 billion of open interest. Futures price premiums relative to traditional spot markets need to be examined to determine whether traders have formed extraordinary open interest based on excessive optimism. 3-month futures sell at a premium of 1.2 to 2.4%, or 8 to 15% annually. Sellers of futures contracts are essentially putting off the deal and need the extra money to make up for it. However, for stocks with a pronounced bullish sentiment, the premium would exceed $3.8 trillion, or a 25% annualized premium. As shown above, June futures moved about 10% higher than usual on spot exchanges. That's an annual premium of 75%, which is nothing short of incredible. On the contrary, these levels are inefficient and represent an unfair influence on the buyer. Cryptocurrency markets are very volatile, and no one can promise that this or that event will not happen again. However, there is evidence that traders were so confident in their strength that they did not reverse their positions, paying 8 to 9% more than the market rates. Consequently, there is reason to believe that the current $600 billion open interest in futures and the negative premium reflects excessive fear and does not adequately reflect the market. The price of XRP is up 294% in 2021, and recent news from Ripple Labs about the SEC proceedings is very positive. As long as XRP holds above 80 cents, investors can expect open interest in futures to grow to $1 billion. However, it is unlikely that markets will ever reach an annual premium of 50% or more, let alone $2 billion in open interest. Longs often take some time to regain confidence, which is favorable for further growth.